Anonymous institutional investor and independent analyst Plan B recently called his followers' attention to one final piece of information about his failed floor model and stock-to-flow model. In his tweet, the pseudonymous analyst announces that his floor model has failed since it incorrectly predicted $98,000 and $135,000 for Bitcoin in November and December 2021. He adds that his stock-to-flow model remains valid and more useful than all his other models in critical situations, which everyone would agree Bitcoin currently sits in. Welcome to Savvy Finance. This video examines Plan B's recent tweet on his stock-to-flow model and how it remains valid and best for critical moments. The analyst also talks about why the floor model failed and what he plans to do with the stock-to-flow model from now. Please ensure you watch the video to the end, hit the like button, and subscribe to the channel. Everything helps us grow, and we appreciate your continued support. After 3 failed predictions in the last months of 2021, Plan B has been dedicating a lot of time to defend his stock-to-flow model. Last year, Plan B had made a series of price predictions for Bitcoin using his floor model. The first 2 predictions for August and September had hit the mark directly, while the October prediction had been slightly off the mark. When the $98,000 price prediction for November failed, many sources, including major news outlets, assumed that Plan B's famous stock-to-flow model had failed. Then Plan B issued a statement to correct the assumption and clarify that the price prediction was off his floor model. In December, Plan B's $135,000 price prediction also failed, further lending credence to the perceived weakness of the institutional investors' models. However, Plan B refused to throw in the towel. He made another $100,000 price prediction for Bitcoin by Christmas. This time, he used his stock-to-flow model. When that price prediction also failed, people assumed both the floor model and stock-to-flow model had failed, but Plan B clarified that the $100,000 prediction was more of a price average prediction than an actual price prediction. He explained that he had attempted to oversimplify the workings of the model. Instead, he should have stated that the $100,000 prediction was the one standard deviation band average. To permanently seal the validity of his stock-to-flow model and keep his followers informed about his models, Plan B has once again taken to his Twitter account to clarify things. In his tweet, the passionate analyst and investor announces that he is abandoning the failed floor model and keeping a closer watch on his stock-to-flow model, which he believes is the best for critical situations. Plan B's tweet reads, in case you missed it, "Floor model failed, I will not use it again. Stock-to-flow model is at the same critical point at the standard deviation band as when I wrote the stock-to-flow article in March 2019. In my opinion, stock-to-flow is still useful. In fact, the model is most useful in critical situations. I will watch if stock-to-flow stays within one standard deviation." According to Plan B, Bitcoin is still within one standard deviation band in line with the stock-to-flow model. The standard deviation band is roughly between $50,000 and $200,000, meaning that we are in the lower bounds, but things can change anytime soon. Other independent analysts, including Willy Woo, have pretty much said the same thing. But Willy Woo believes that Bitcoin needs a mania phase that would send it into the upper bounds, which his models currently project at about $216,000. Plan B's Bitcoin stock-to-flow model. The stock-to-flow model draws a comparison between Bitcoin and commodities such as gold, silver, and platinum. These store-of-value commodities retain value over long time frames due to their relative scarcity. The more difficult they are to get, the higher their value. When it comes to scarcity, no other digital object has been able to achieve the level of Bitcoin. A digital asset has been built to be very scarce and valuable in the long run. So the stock-to-flow model evaluates the number of Bitcoin currently in circulation against new production flow. The result will be high for an asset with high potentials to show the difficulty of new production. Bitcoin's halving cycles ensure that the digital asset's price will keep climbing higher as it gets more and more scarce. Though there might have been some hiccups last year, the model's foundation is solid. When a follower asks what went wrong with his predictions, Plan B announces that he believes the China exchange ban to be a huge contributor. This and some other factors might have temporarily affected the cryptocurrency's upward price movements, but other factors are bound to push it in the right direction once more. Thanks for watching the video. Please hit the like button, share your thoughts in the comment section below, and subscribe to the channel.